So let's start. Firstly, what is accounting? Now, if you are a person who has learned accounting back in school, then a definition you by-hearted back then might come to your mind. Accounting is the art of recording, classifying, summarizing, etc., etc. And if you are from a non-commerce background, you might know that accounting has got something to do with company, business, accountants, etc. Actually, what exactly is accounting? We know that in a business, thousands of transactions are happening each day. How much of a brilliant accountant or business owner you are, it might not be possible to remember all these transactions. Maybe we can remember the transactions of a day. What about a week-long transactions or month-long transactions? Impossible, right? Hence, we have to record these transactions in a systematic way. Okay, so we have to record these transactions. Understood. Now, do we have to record all the transactions? No, we have to record only those financial transactions with monetary value. Now, where to record these transactions? In the small shops near us, we see that a small notebook is maintained to record the amounts received and paid. Is that enough? It is okay to do that for small shops, but for large organizations, if we do this, how will we evaluate our business? How will we understand our financial performance or financial position of our business? We know that we are doing business to get profit. So, how will we know if we have generated profit or incurred losses in the current period? How will we know the financial position of our business? How will we know how much do we have pending to pay to our suppliers or how much our customers are supposed to pay us? How will we know how much assets do we have? We need to get these summarized details. How will we get these details? Also, we are supposed to file our financial statements with certain government departments like GST, income tax, etc. Now, if we give this small notebook with our receipts and payments noted down, will it be sufficient for the GST department? Will the government departments accept this report? No, right? So, proper accounts should be maintained by systematically recording all the transactions required. And we should also prepare financial statements and also file these financial statements with the respective authorities. Hence, accounting is the entire process starting from the proper and systematic recording of day-to-day financial transactions, maintaining accounts, preparing the necessary financial statements and reports, and providing data to the management for financial decision making. Accounting is the language of business. As long as business is there, accounting will be there. To work as an accounting professional in any company, firstly, we need to understand what is their business. And next, what is the processes in their business. Only when we clearly understand the processes in their business, we can start recording transactions in a correct and systematic way. Today, we have various types of businesses. A group of businesses carrying out a similar type of activity is called industry. There are three major industries: manufacturing industry, trading industry, and service industry. There are also a lot of other industries like construction industry, technology industry, etc. But in this course, here we will be discussing the major three industries, that is manufacturing industry, trading industry, and service industry. First one is manufacturing industries. The industries where products are manufactured on their own and then sold. Some of the examples are Hero Honda, Tata Motors, Asian Paints, Apple, Samsung Electronics, etc. In these, the process is carried out is manufacturing process, or products are manufactured and then sold. Let's take the example of a cloth manufacturing company. We will need raw materials like thread, fabric, dyes, chemicals, etc. Then we will need labor. And then we will also incur some direct expenses like electricity, rent of machinery and equipment, etc. The finished goods that are not sold at the end of the year will be shown as closing stock. We also have some materials that will be in the stage of production, that is, production has not been completed. These are called work in progress. These will also be shown as a part of closing stock. Now, we might also have some raw materials which we did not use in this year for the production process. These will also be shown as part of the closing stock. Hence, closing stock will have three parts here. That is finished goods, work in progress, and raw materials for a manufacturing company. Hence, the accounting in a manufacturing industry will be supporting this manufacturing process. That is, we'll show the purchase of raw materials, we'll have to show the production process, and we'll also have to show the work in progress and the sale of finished goods. The second one is trading industry. In the trading industry, we directly deal with finished goods. We purchase these products in bulk and sell them to retailers or dealers or customers, etc. We also add a profit margin when we sell them. In our day-to-day life, the majority of shops we see around us are in trading businesses. Supermarkets, hypermarkets, textile shops, etc. we see around us are trading businesses. Here, they buy the products and sell them with a small profit margin. Hence, the process involved is just buying and selling. Third comes the service industry. The industries which provide services like hospitals, schools, consultancy firms, banks, etc. come under service industry. Chartered accountants, doctors, advocates, engineers, etc. are all service providers. Here we provide the service and collect the fees for it. There is no manufacturing of products, hence no closing stock. We provide the service and we collect the fees for it. These are the three major business industries we should know about.